How much should you really be saving for taxes? Well, that's what our Tax Therapy Tuesday is all about on today. Welcome to another Tax Therapy Tuesday. I am your host, Chastity Grady, and at my company, Grady Tax Plus, it is my number one goal to make sure that we are keeping the IRS out of your pockets so that you can live a better life. Why? Because you deserve it. And so during this season, this tax season, I want to clear some things up because this question right here, it costs many people thousands of dollars every year. Okay, let me say that again. This question right here, how much should you really be saving for taxes? How much should I really be saving for taxes? That question right there costs people thousands of dollars every year. And if you're saving for taxes based on how you feel or what Google said or what your friend told you, then you're probably undersaving. You're probably undersaving and underpaying, okay? And that's why tax season may feel stressful for you, and that's why you're probably not even looking forward to filing your taxes right now. And so let me take the moment really quickly while it's still early in the live. I want to take the moment to share this live. So I want you to also share this live out to your communities, to people who need to know how much should you really be saving on taxes. All right. So here we go. Let's go ahead and get into the topic. All right. So people ask me this all the time, right? They ask me, is 10% enough? I've heard about 30%. Or some people just say, I just try to save what I can and hope for the best. But typically, let me tell you about taxes. Taxes don't work off of your hope. It doesn't work off of your average, okay? The right number, it depends on your specific situation. The right number that you're supposed to save for taxes, that you're supposed to pay for taxes, it is specific to your tax situation and not someone else's, right? What may work for one person, it may not work for you. You and another person, you can make the exact same income in your business or just in general. But the deductions and credits that you each qualify for could look very different, which has an effect on how much you pay in the end when it comes to taxes, right? So you may hear stories like, oh, well, someone, they made just as much as me, but they didn't pay just as much or have to pay just as much in taxes. Well, that's why taxes is specific to your situation, because maybe they had other things going on. Maybe they had other tax strategies that they qualified for that you didn't qualify for, right? So the right number that you're supposed to pay, that you're supposed to save, it really depends on your situation. And so for most people, honestly, there is a baseline. I'll tell you this. There is a baseline for most business owners as far as when you think of a ballpark on how much, should you expect to pay. And for general purposes, you want to expect to pay around the 20 to 30% profit, okay, of your profit. And I'll get into what profit is for taxes. Now the 30%, for 30%, I will only recommend 30% for people who have a state with income tax, right? So if you're in a state with income tax, then that extra like 5 or 6 or so percent, that would go towards your state. But I would never recommend someone save 30% for taxes unless your tax bracket is in that percentile, okay, is in that percentile, and most people aren't. When you think about like being in the 30 or so percentile, that's for, three, four, 500 thousands of dollars, right? And so most people don't fall into that category. Most people are in about the 22, around the 22, 24 percentile for taxes. And that's where that average kind of lies. So I always typically recommend right in the middle of that percentage, right, of your profit, not your revenue, because that's another mistake that I see people make. You're saving based, or you're paying and saving based off of the revenue. The revenue is the actual money that you bring in. So you charge a client $120, they pay you $120. That's your revenue. But the profit would be they paid you the $120, you spent $50 out of that $120 for your business software or something, and then you're left with that $70. The $70 is what you would pay taxes on, not the 120. So you have to, that's why you have to know your numbers, all right? It's not about the revenue, right? It's about the profit, because the IRS, they are taxing you on the net profit. They are not taxing you on the actual gross, okay? That's another word for it, gross. The actual gross revenue that you are bringing in, okay? They allow you to get a break, okay? They're not completely harsh. They allow you to get some tax breaks. They allow you to have tax deductions. They allow you to use tax strategies so that you're not paying 100%, on the 100% of money that you make, right? Okay, so that's a good thing. That's a good thing. All right, so we're saving based on the profit, not on the revenue. Because if you do it on the revenue, that will stress you out because you're paying more money. And when you're paying more money, that means that you have less money in your pocket, right? And the goal is to keep more of our money in our pockets. That's why we're saving based off of what's left over after we spend money for our business. Okay, that's the more accurate number. Okay, and this kind of boils down to, if you don't know your profit, then you can't really know how much to pay in taxes, right? That's another thing. How can, when I get these questions, well, how much should I pay in taxes? Even if I give you a percentage, if you do not know your revenue minus your expenses, which is your net profit, then you're still at a loss. Okay, you're still at a loss, because how do you know how much you're going to pay taxes on? And in short, all of this always goes back to bookkeeping, right? Bookkeeping, good bookkeeping, clean bookkeeping, that helps you not only to tax plan, but it also helps you to accurately know how much to account for when it comes to taxes, right? And even though I gave you a percentage range, that can go up, it can go down depending on your business structure, the total income that you're bringing in, whether you have other sources of income, because you have to remember, when you are not an S corp, when you're not a partnership or a C corp, uh, your business income and your business income expenses is going to be filed on a Schedule C with your personal tax return, right? It's going to be filed on a Schedule C with your personal tax return. And even if you are a S corp or in a partnership, that net profit is still going to get passed on to your personal return, because you pay personal taxes on that. And we already got, listen, if you've gone to the Understanding Small Business Taxes training, or if you've watched any of my lives, then you already know there's no separate business tax for partnerships and S corps. The only true separate business tax is if you have a C corp. All right, that's a whole nother topic. Just believe what I say for now. Everything else is an individual, which is what the IRS calls it, but it's a personal tax. All of it is an individual / personal tax. And so that percentage of what you would pay in estimated taxes, that can go up or down depending on if you have other types of income, if you have a W-2 job, if you took out retirement, if you have stocks that you sold, if you have stocks that you sold at a significant loss. So it's different variables. There's different, listen, taxes is not one size fit all. We really try to make it be one size fit all, but it can't. There's no real way to make it be one size fit all. That's why the IRS gives us tax brackets. That's why we have all the different income limits, because if you have certain income limits, then you can get this credit, and if you have certain income limits, you can get this deduction, right? It's not a one size fit all. And so I'm not going to try to make it be a one size fit all, because it is variable, right? It is variable. But the one thing that is not variable, the one thing that truly matters, is that you must, okay, and the IRS tells you this on their website, is that you must have a way that you are keeping track of your records. Okay, they don't tell you how to keep track. They don't tell you use a spreadsheet. They don't tell you get QuickBooks or any other types of accounting software. They just says you must have a method that you're using to accurately keep track of your income and expenses, because this is how the IRS is going to check how are they going to tax you. Okay, so that's one thing that's not variable. What's not variable is keeping track of your expenses, keeping track of your income. That is something that's stable and will not ever change. Okay, so common mistakes that I see people make when it comes to, how much should I be saving in taxes, is that, I see people get this wrong. When you save money or you, let me say this again, when you save nothing, rather, when you save nothing and then you panic later. That's, listen, if I always tell people, if you don't do anything else, please at least save the minimum 15.3%, which is the self-employment tax. At least do that, because when it comes to that self-employment tax, it's based off your net profit. And unless you have refundable credits, then there is no way to get that self-employment tax decrease unless you have made tax payments. Okay, there's no other way. I don't care what anybody tells you, there's no other way. And you can look at the tax form on how it flows. The tax return, how it flows, shows you what's going on. When you have that self-employment tax applied, the only way to make the self-employment tax goes down after it's already been calculated is if you have a refundable credit or if you have made estimated tax payments. Most people don't qualify for refundable credits like the earned income tax credit. Well, let me say that most of the clients that I work with, they don't qualify for the earned income tax credit or the additional child tax credit, which is refundable. Or if you are in school, because I work with people who already have their degrees, so they're not in school anymore. Or the premium tax credit, that one is from the health insurance marketplace. So if you overestimated your health insurance payments and you're supposed to get refunded something back, then that's a refundable credit. And then apart from those, it's only if you made estimated tax payments. So when someone is in a bind financially and you still want to account for at least a portion of the tax to pay, I always recommend, well, at least do the bare minimum of 15.3%, which is that self-employment tax. Now, you still have the federal income tax to account for, which is why I typically err on the side of doing 25% total for saving for taxes. When it comes to federal, if you have state, then yes, you want to move closer to 30. But that 15.3% at a bare minimum, if you can at least account for that one, then that's going to help you that's going to help you have a big chunk of your tax bill taken care of. Because with the federal income tax side, we can what's the word I want to use? We can basically kind of not alter, but we can basically kind of work with that number a little bit more, because we do have the standard deduction, or if you itemize your deductions, we have adjustments to your income that we can help reduce your income down. There's other things that we can do on the federal income tax side to help lower that number. But like I said, after you've taken all of your expenses and deductions for the business, there's no way to reduce that self-employment tax. All right. Okay, so moving on. So basically, when I said if you save nothing and panic later, we don't want to do that. At least save the 15.3%. Now, if you do save that 15.3%, you also need to know that I should expect to also pay a little bit more money in taxes, because I only accounted for one portion of the tax. I did not account for the federal income tax or state taxes if you're in a state that has state income tax. All right. And then if you save too much, we never want to save too much, right? That's why I don't subscribe to people saying, oh, save 30%. I would never ever tell you to save 30%. Unless you are in a state with a state income tax and your personal income is on the higher side. That's the only time I would ever recommend you pay 30%. If you pay 30%, you're overpaying. And why would you want the IRS holding your money when you could have invested it, when you could have strategized with it throughout the year? All right. And then avoiding the conversations altogether. That's something you don't want to do either. You don't want to never want to avoid taxes, because taxes doesn't go away, right? That's one of the things that is here to stay, that we know for sure. It's taxes. So that's why, listen, I don't have much time to go into this with y'all. This is why I always say the IRS should just be your friend. Make the IRS be your friend, because if you know taxes is not going away, then how can you use taxes to your advantage? That's why I'm always a proponent of doing tax strategies, using tax strategies and planning, tax planning to make the tax system work for you. You should always make the tax system work for you, right? And not you work for it. You should not listen. Taxes should not be a stressful part of your life. It should be the very least stressful part of your life if you go about it the right way. If you go about it the right way, there's no reason to avoid. You avoiding taxes is a sign that you also avoid other difficult or hard conversations in your life, right? And that's something that you personally have to deal with. Okay, maybe you need to go to therapy for that. Even though this is Tax Therapy Tuesday, we're not talking about that part of it. Okay, maybe that's something you need to go process. Why am I avoiding having these hard conversations? Why do I avoid difficult things that cause me certain types of feelings like anxiety or depression? Why do I avoid those things and face that head on so you can stop doing that, right? And because like I said, one thing I know is that when people are avoiding taxes, avoiding talking about taxes, you are also avoiding other areas in your life that may be a source of stress for you, and we do not want that. Okay, we want to live peaceful lives. There's no reason for us to live a life that's stressful, right? We should be able to enjoy the fruits of our labor, right? We should be able to enjoy the fruits of our labor, and that does not include being stressed. That does not include being depressed. Yes, stressors come. Yes, stressed situations happen, but that should not be our norm. Those should be one-off situations that we deal with and we keep moving along, not something that we're stuck in and we stay in for years and years and years on end. No, we listen, we that should just be a temporary spot for us, a temporary place for us that you may have ended up in, but that you're going to get out of it and move on, right? Okay, so I kind of talked to you about some of the mistakes, and like I told you, tax season, it should not feel stressful. It should not, when you're doing the right things, when you're managing your business money, when you're being a good steward. That's another word, being a good steward over your financial resources. We talk about personal budgeting all the time. Personal budgeting has an effect on your business finances. I don't listen. There's no other way around it. Personal budgeting, how you use your personal money, how much of your personal money that you need, it has a direct impact on how much money your business is able to keep and how much that you need from the business. They go together, even though they're still separate entities, but they go together. They go together. And so when you're being a good steward of your money, when you're managing your business finances, you know what's coming in, you know what's going out. Then tax season won't seem scary to you. Okay, making tax payments, that's something that you would expect. You're not going to be shocked by numbers. You would be able to have financial peace if you go about this the right way, right? So this is why you should know your monthly profit. You should be tracking this on a month-to-month basis, not on a year-to-year basis. It's too much that goes on in 365 days in a year, right? We can barely remember what we've done 30 days ago. It's too much. We got to track this on a month-to-month basis. You need to know your net profit on a month-to-month basis. You need to be setting money aside for taxes regularly. I recommend on a month-to-month basis. At the beginning of the month, when I look at my clients' financials, I'm telling them at the beginning of the month, hey, based on how you did for the month of, well, let's say January, go ahead and put this amount aside for taxes. Okay, be prepared to pay this amount for taxes for this upcoming quarter, right? Yeah, so reviewing your numbers consistently, always looking at it. Don't be afraid. Listen, it's just numbers. It's just numbers. There's nothing to be afraid of. They're not gonna pop they're not gonna pop out of the paper and scar your eyes, right? It's just numbers. It's just numbers. And also whenever you're managing everything, you can make adjustments as your income changes, which is important because in business sometimes it's up, sometimes it's down, and you need to be able to adjust when those things happen. And you won't know how to adjust or when to adjust or see the trend to adjust if you're not tracking this. Okay. All right, so as we come to a close, like I said, we are in tax season. We're in a tax season, and this is exactly why I help my clients with bookkeeping. This is why I help them with tax planning, so that they can be prepared for this very moment, so that they can be prepared, so they can officially close out the 2025 tax year. As a reminder, the longer you go without filing your tax return, whether it's the last year or years prior, then the longer you are holding on to that year's problems, to that year's issues and situations, close out those years, right? Take the opportunity to say, hey, I want to officially be over 2025. It actually ended, but let me wrap it up by filing my tax return timely so I can focus on being present into 2026 and do what I've been called to do and do all the things to help my business grow and scale to the next level without worrying about trying to organize 2025 stuff, without trying to just deal with anything that has to do with 2025. Let's close that chapter by filing that tax return and move on, okay? So, if you're someone and you know you want me to prepare your tax return, you're like, Chastity, I heard you talking about business finances and I'm all over the place with that too. Then listen, you're going to want to connect with me next Wednesday on February the 18th. If you need to learn more about working with me, learning about my processes and how I help clients keep the IRS out of their pockets, I do have a free informational session that is on February 18th at 6:30 p.m. Central Standard Time. Those are held every 2 weeks. Those are not a requirement to work with me. Okay, those are not a requirement. That's just there for you in order to have that free time to come in and I can give you well, not can I can I do give you a presentation of the back end of my company and and what we do here at Grady Tax Plus to support you. And then I do also have one-on-one consultations. Those do come with a small investment. That's why I do my free informational sessions. But if you're like Chastity, I've been watching you. People have recommended me to you, and I already know that you're the one for me. I already know that you're the one for me, right? I know that you're the you. I know you're the one. Then you don't have, like I said, you don't have to. I'm trying to get the link for y'all. You don't have to go to one of the free informational sessions. You don't necessarily have to have a consultation with me. If you know that I can help you based off my experience, based off who I work with within my own company, then all you have to do is go to my website. I'm putting in a link. All you have to do is visit our website to choose your tax package to get started. If you are a LLC, PLLC, and you're not an S corp, if you are a independent contractor, sole proprietor, and you only have one type of business. So, for example, I typically work with social workers and therapists in business. So, if you're just doing your therapy business, then that's just one business, and that is the gold package. Okay, if you have more than one type of business, for example, maybe you're a travel agent plus you have your therapy business, that's two different types of business. That is the platinum package. And then again, obviously, if you're an S corp, you'll choose S corp. Now, the only caveat is that if you are a partnership, that one I do require that you actually do have a consultation with me when it comes to partnerships. As for partnerships, I do not accept all people or all business entities that are partnerships. Those are on a case by case basis for my preference. So you do have to schedule a consultation with me. But if you go to the tax service page, you can see that option, that link to schedule. But for all others, if you just go to the website, you can choose your tax package between gold and silver. Gold is one business. I'm sorry, gold and platinum. Gold is one business, platinum is two businesses. Silver is if you don't have a business, but you have other things going on. So that's for the silver. And then S Corp, that's your own separate tax return for the S Corp. Okay, so that is in the comments. The deadlines for the S Corp tax return and partnership is March 15th. It's literally almost 30 days away. So not much time unless you get on an extension. The regular deadline for filing your personal individual tax return is April 15th, right? April 15th. And that is about almost 2 months away unless you get an extension to file after that time frame. But just know that an extension to file does not mean an extension to pay. That's a whole different topic. Okay, extension to file your tax return is also not an extension to pay. Your taxes are due when they're due, and the IRS doesn't give you an extension for that, at least in the formal sense with your tax return extension. Okay, so I hope y'all enjoyed this live. I hope you understand a little bit more about how much you should be saving on taxes, how much should you be paying in taxes, how do you even know how much of your income do you that you reserve for taxes. I hope you have a clear understanding on that. One second, y'all. Sorry about that, y'all. Junior gotta get ready for school. But yeah, so yes, I hope you have a clearer understanding on that. And as I close with my benediction, many of you know that I'm a follower of Jesus, and you don't have to be a follower of Jesus to work with me. You just have to know where I get my help from, right? You just have to know where I get my help from and be okay with that. And so, with my benediction in John chapter 10, the Jews, they were questioning Jesus, and they were, saying, "Hey, how long are you going to keep our soul in suspense? If you are the Christ, then just tell us." And Jesus said to them, "I told you, but you did not believe me. The works that I do, they testify concerning who I am, but you do not believe me because you are not my sheep. My sheep, they hear my voice, and I know them, and they follow me. And they shall by no means perish. I should give them eternal life, and no one shall snatch them out of my hand. The Father who gave them to me, no one shall snatch them out of his hand. I and the Father are one." Why do I give you this benediction? Why do I give you the scripture? Well, I have been commissioned as my role in as a kingdom citizen. I have been commissioned to make sure that I am giving the good news, that I am giving the good news about hearing the Lord's voice, all right? But not only that, because this also can be applied to your business. I use scripture all the time to help me guide me on what to do when it comes to my business. That's why I say you have to be okay with knowing where my help comes from, because sometimes the Lord will give me insight on what to do with your business and how to help you in your business. And that's not of myself. I'm not going to take credit for any of it at all. Okay, it's not of myself. And so when it comes to working with people, when it comes to following people, there's you follow people based off of their voice, based off of how they talk, based off how they carry themselves, based off of a particular sound that is coming from within their voice, right? Not necessarily the tonation of their voice, but there's a particular sound that's within their voice that lets you know that person is the one, that's who I need to connect with. And I've gotten comfortable, and you should get comfortable with people who decide not to work with you, not to connect with you, not to follow you because they do not hear your voice, right? You have to be, for number one, you have to speak up, first of all. You have to speak up and use your voice so that people who are assigned to your voice, they can hear your voice, hear the particular sound that they're supposed to hear so that they can follow you, so that they can get the breakthrough that they need that's only going to come by you assisting them, which is why I do the lives on Monday through Friday around 7:30 a.m. Central Standard Time, so that people who I'm assigned to connect, who I'm assigned to shepherd, that you can hear my voice, so that you can know that you are in the right direction, so that you know that I'm the one who is supposed to help you, right? But at the end of the day, regardless to that part of it, the ultimate goal is that you will hear Jesus's voice and follow him, right? That you will hear his voice and you follow him as the ultimate person who can help you, right? And so that's all for today. I hope y'all enjoyed Tax Therapy Tuesday. We'll be back for Wednesday, for Wellness Wednesday, Thursday, Talk to Me Thursday, and Friday, Fire Your Boss Friday, all right? So I hope y'all having an amazing Tuesday, and I'll talk to you in the next one.